Josh, we've talked recently about the interest rate environment we're in. And one of the byproducts of this interest rate environment is we are finally getting paid quite attractive returns on money market instruments. At the same token, we do see a lot of clients come in that have money, let's say, at a big bank, right? And their money in savings accounts or checking accounts. And those aren't necessarily paying the respective rates that you can get in money market type products. So I'd love for you to talk a little bit about what the money market landscape looks like today and some of the logistics of how we as an ICE investment committee have worked to maximize interest for our clients.
Absolutely. So I think there's two prongs to this conversation. First off is how much should we hold in cash within our bank accounts and within our investment accounts. And it can be tempting with some of the money market yields that are out there. And the first prong is finding a balance for what your cash needs are in the short to medium term, especially with some volatility potentially coming in the markets. But at the same time, making sure you're earning what you should be on that cash. So if you think about a lot of the big banks, as you had mentioned, right now their savings accounts on some of their most preferred memberships are paying 0.01, 0.02%. Meanwhile, money markets that we have access to are upwards of 5.1%. As well as an internal group, what we do is we review all client balances and say if you meet a more preferred money market, so if you have above $100,000, you can qualify. We automatically trade client assets into the most preferred money market given their situation. So we have a wide swath. We have processes in place to make sure that you're earning what you should be on cash, because 5% versus 0.01, 0.02 is a big difference when we think about your broader financial plan.
As you've alluded to in many instances, every bit of this matters, right? So when we can find opportunities to take advantage of these higher interest rates, we're working hard to do so.